So it seems that First Citizens Bank is going to go ahead and buy Silicon Valley Bank. And I feel like the theme of the day is, you lost money, but hey, the world isn't over yet. And I want to share some headlines, and let's just jump right in. So you can see here, First Citizen buys Silicon Valley Bank after run on lender. And one of the things I thought was a key number is FDIC estimates the cost of SVB's failure at $20 billion. And it's kind of interesting because it was similar to what Elon Musk essentially lost people. It says Elon Musk values Twitter at $20 billion. And remember, he bought it at 44. So yes, you're losing 24 billion, but what's a few billion among friends, right? The world isn't quite over yet. And that's sort of what the joke of the day is. One of the things that's also going on as well is the First Republic thing. I guess they can't find a buyer. And the last news that I saw, I remember seeing something like, Biden personally was calling up Warren Buffett and say, yo, can you help us out? And I haven't seen anything past that. Warren Buffett's probably like, I'm a little bit busy right now. You guys go handle it on your own. But we'll see. And my thoughts on something like this, for example, say Citizens buying Silicon Valley Bank or, trying to get Warren Buffett to put money into a bank or whatever. I think if the price is right, people will jump in, and they're kind of just playing chicken because essentially, something needs to be done, right? So this is sort of the chance when these kind of people, say like Warren Buffett or Howard Marks, these kind of people will come in and try to buy distressed assets at essentially rock bottom prices. So, if you've got the power, you got the money, you got the negotiating power, and right now, cash is king. Also, too, this was an interesting one. I can read headlines here. Saudi National Bank chair resigns after Credit Suisse remark. And if you remember this is basically, it was like in an interview, I think it was like on Bloomberg or something, and they asked one of the representatives at Saudi Bank, and like, hey, are you going to be helping out Credit Suisse? They got problems over there. And he's like, nope, absolutely not. And so after that, Credit Suisse basically starts tanking. That caused the panic, and then this guy gets sacked, which is really interesting. Now, I think it could be one of two things. I think one, it could be that's what they were saying on the inside, but he wasn't supposed to say out loud. Or theoretically, he wasn't supposed to say anything at all, and that's not what they were planning on. But I don't know. My guess would be on the former rather than the latter. I'd like to hear you guys' thoughts, what you think about that. But however, they could just be firing him just to save face. So any number of these things, who knows? That's for them to decide. And for these kind of things, I don't necessarily, believe any official story that comes out, because we may never know the truth in this. But we do know that he's been fired. And this is sort of a related story as well, which we got a little bit more details on. This is a sensitive topic. I just want to be aware of this. This is very sensitive, and I'll let you guys make your own conclusions. But Peter Thiel, who is largely seen as starting the bank run at Silicon Valley Bank. That is a crime to start a bank run, just to be aware. But we do know that he was essentially letting his founders, in on sort of the I guess, inside info or tips or whatever, and say, hey guys, looks like SVB is failing, get your money out. And that sort of started the run. One of his sort of associates / lover, he's gay. The report is saying he fell out of a window. This is what it is. This is in Miami. Now they're ruling it so far as being that he hurt himself. I won't say the word, but you guys can decide what to make of that. And I think this could end up being a story. Now, Peter Thiel is a powerful person and is a large political donor to the Republican Party. And I'm, like I said, you guys can make your own conclusions on these things. But we're talking about a lot of money and important people. So that it is what it is. And it's interesting because we'll probably be studying this stuff for years. You can read the headline here. First bank crisis of the Twitter generation. The pressure on banks is very different from 2008. And it's interesting because I remember watching all this stuff on Twitter, about what should you do with your money. And I mentioned you guys before as well, as this is a real thing. There's a lot of banks worry / companies / just people just worried about what the future holds. And essentially it is that when you talk about, say, bank runs, you're always sort of guessing what's the next person going to do, right? That's essentially what it's all about. And then you got a bunch of essentially the vultures is what it is like circling around trying to take advantage of said situation. And you want to put your money somewhere that it's safe. There's already been pressure on the banks because essentially with interest rates going up, people have been moving their money into, be it money market funds or just buying treasury, these kind of things, and just storing your, money in cash where it's not giving you a lot of yield from some of these banks that weren't raising it very high. They were moving their money around. Also, too, obviously, you have, concerns around the world, and there could be money going, flowing across borders. for any number of reasons. And one of the things that I want to show you guys is interesting. They've been showing some different charts to kind of explain sort of the magnitude of these things. We've talked about these numbers before, but these charts sort of really illustrate it. So this is a Wall Street Journal one that says like where financial risk lies in full charts, but there's just a couple in particular I think are the most important. So we've talked about this before. Silicon Valley Bank was underwater in unrealized losses. You guys can see this, but they're not alone. If you look at the whole banking system, they're down quite a bit. The numbers are around like the 600, was it the billion mark? Yeah. So it's, if this is where sort of we got to keep people calm. This is sort of why everyone's like talking, don't pull your money out, like kind of stuff, because essentially is, you can see here, this is your insured deposits at banks, right? This part here. And then this part here is your uninsured deposit. So, essentially, if people lose faith, there's not enough money there. I mean, you guys can see yourself. This is your insured and your uninsured. And this is sort of why we've been watching carefully what Janet Yellen says. Are we going to insure all the banks or not? And she keeps sort of changing the messages on that. Because you got to be careful with your language on these things. And this is any one of these people in public. Because, again, just look at what happened to the, the guy over at Saudi National Bank. He says, like, you were not helping Credit Suisse. And essentially that thing tanks, and then UBS ends up buying it. You gotta be careful with your words. Now, one of the things that is interesting is we've been talking about that commercial, essentially commercial market is in trouble. We're talking real estate here. And essentially what it is this is the mortgage-backed securities are here, and then commercial mortgage-backed securities are a smaller part. So this isn't necessarily the same magnitude as, say, something like the 2008 crisis, because even though we do have a problem with essentially either startups are failing and they're not paying the rent, essentially like something like a Twitter's not paying, and then that sort of cascades. If like this happens over multiple situations, not just startups, but just any type of companies that are not paying the rent, it'll cascade and cause a domino. And I think it was like a PIMCO is having problems, and there's essentially ones in either New York or San Francisco. We're talking about landowners, landlords, you could say. And, this would have ripple effects throughout, the banking system. But our banking system is built on multiple things. You guys can see this here. So you have what commercial and industrial loans has this part here. Then you have your consumer, you have real estate, which is a big part of our market, right? Other loans, and then you have your securities. So we know a lot of this stuff is underwater. As interest rates go up, and if the banks didn't do the right projections, right, they're underwater. And we saw that first chart over here before, right? Unrealized gains and losses, and it's all pointing down to the negative, which is a problem. So this is sort of why I showed you these charts, because essentially you got to keep faith in the system. Again, this is uninsured deposits versus insured. Now, the commercial markets where the problems are, remember, everyone's working from home, you don't need to go to the office, et cetera. And so your U.S. office vacancy rates are going up. But it's not quite as large as, say, like I said, in 2008. However, it does affect the mid-sized banks disproportionately. So this is sort of where or why First Republic is having and struggling to find a buyer, because essentially they're overexposed to this kind of market here. And overall, with the thing that you're watching, and we've talked about him before, this is Mike Wilson over at Morgan Stanley. He keeps saying the same thing, and I agree. I think this is probably realistic, that essentially the forecasts that companies gave in Q1 regarding the forward-looking earnings estimates are probably a bit off and a bit high, because something that I just keep saying is like, keep an eye on consumer debt, these kind of things, because essentially if, consumers are running out of cash and they're essentially, using everything on debt, and then debt gets to be untenable because interest rates are rising, right? They can't make payments every month. That'll slow spending. And if inflation stays elevated, right? So like just for a regular person, if your rent is too high, you feel like you're not getting a big enough job, a raise at your job, and you feel like food is too expensive and fuel is too expensive, the system starts to collapse upon itself. The same way that, if everyone has a run in the bank, the system collapses, or the same way if people don't pay their rent, the system collapses, like these kind of things. Now, I don't want to imply like, we're all going to die and these kind of things. It's not going to be like that. But I think what it is going to be like, it's going to be like if you planned poorly, like a Silicon Valley bank, and you didn't manage your risk properly, yes, things can get really, really bad. So that's why I always emphasize on this channel, make sure you're paying down those debts, especially the ones that are variable interest rate. Make sure you have a secure at your job, right? And if you're struggling at, say, your job, you're not sure, start looking around, start asking your network, hey, is there any opportunities? Or hey, just let you know, I just want to, I'm out there, I got these skills, these kind of things, and you just sort of want to have your golden parachute ready, I guess is what I'm trying to say. Overall this week, I think it'll be interesting how the markets react to, Silicon Valley Bank being bought, but no one's buying First Republic. And we're still going to see what happens in Europe. What's going on with Deutsche Bank and in Credit Suisse and UBS were now like under investigation by the Department of Justice over in the U.S. on like, hey, are you guys evading the Russian sanctions or not? So these are the different things that I'm watching, and we'll try to go through more stuff every day. And I do appreciate you guys always coming back for more. I'd love to hear your thoughts on any one of the things that we talked about, and I'll catch you in the next video.